Hi, I'm Jeremy Couchman, Senior Economist at Kiwibank, and today I'm joined by Menaka Pineski, the trader in Kiwibank's financial markets team. Now, on the February 24th, the Reserve Bank released their first monetary policy statement of 2021, and it all seemed to be as expected. Policy settings remained unchanged, and the Reserve Bank delivered a more upbeat set of forecasts, which is consistent with the stronger data flow that had come out since late last year. The Reserve Bank also talked up some of the downside risks, saying that policy stimulus will remain in play for some time. And the markets reacted not as expected. So we saw interest rates actually increase as well as the currency. That followed the statement. And then the following day on the 25th, the Minister of Finance, Grant Robinson, said that the Reserve Bank must now incorporate house prices into their policy decisions. The market sees that as perhaps stopping the Reserve Bank putting more stimulus through if needed. We certainly don't think so, but that nevertheless the markets thought otherwise. Now, Menaka, what's been going on in markets over the last week and this week?
So as you mentioned, Jeremy, the New Zealand dollar lifted on the monetary policy statement. This was also caused by the US dollar having some weakness at the time, but we did see the New Zealand dollar over Wednesday and Thursday last week lift in the end to a high of 74.64, which was probably the opposite of what you would expect from a dovish statement from the Reserve Bank. And really, a lot of this is around what markets are doing now, which is that they're actually challenging the central banks in regards to their resolve for having, very soft monetary policy settings. With all of the strong data that we're seeing and potential for reflation in the markets, are we actually going to see low rates for as long as they can, or is that going to cause a problem with inflation?
Yeah, so there are some broader themes here in markets when we step back and take a look. So some of the increase in rates might be justified, but others just seem to be markets maybe getting a little bit ahead. What are these key themes?
The key themes that we're seeing are, a lot of it's around the vaccination rollouts that we're seeing. So the UK in particular has had what looks like a very successful rollout. We've seen the pound be bought or lifted solidly over the last couple of weeks off the back of this. And this is really the vaccination programs and stimulus packages in the US, and for example, are really adding a lot of buoyancy and more sort of growth expectations to the market.
Yeah, absolutely. Now, the Reserve Bank is clearly aware of what's been going on in financial markets. The Assistant Governor, Christian Hawkesby, came out and just reminded markets that the bank still has plenty of ammunition to use if it needs to. For instance, increasing its asset purchase program, the rate of purchases of government bonds, and also potentially, if it had to, cut interest rates further, although we certainly don't think that's necessary. In fact, we think the Reserve Bank is likely to keep rates here until perhaps the end of next year, so end of 2022. Now, at the moment, it feels like that between reserve banks, central banks and markets, there's a bit of a standoff going on. I guess really it's a matter of who's going to blink first. Thank you for watching.